Hooty hoo, all my stock market gamblers. I'm Tall Mike and I want to welcome you today. Today's Friday, end of the week, October 2nd. We're going to go into the weekend. Now the news today, of course, you've all heard that Donald and his wife, they tested positive for COVID. Oh my goodness, that's terrible. Our prayers go out to you, Donald. Anyways, stock market dropped 400 points out of the gate on that, but we're already cutting that in half, and by the end of the day, we may even finish positive. You just never know in this market. Right now, we're in a crossroads. We're in a crossroads in the stock market, and I want to talk to you about that. Now, the charts that I look at, they're all looking, saying we're going to go down soon. They're saying we're going to have a collapse. Oh, let's say collapse. Let's call it 10, maybe even 20% from here. Anyways, that to a lot of people is a pretty good collapse. This would be a buying opportunity, but it's we're headed lower according to the charts. But here's the thing. The charts don't always tell the whole truth. The charts don't take into account the Federal Reserve. Now, the Democrats have approved the $2.2 trillion stimulus package. Hey, we'll get another check, right? Another $1,200. Isn't that exciting? Well, anyways, the Fed, they're saying they're going to print so much money that they're going to double from here. We're going to double stocks. Now, as a gambler, I have to weigh the risk of betting against the Fed, and you don't want to do that. You don't want to do that. I think they're going to hold this up all the way going right to the election. Now, the election's going to get real interesting with the Donald being not able to campaign because of COVID. Does Biden just walk in? Is he our next president? Starting to look that way. Anyways, we'll see what happens. But I want to talk about why I think the market is going to collapse eventually. Not just yet, but it's going to collapse eventually. The reason is it's incredibly expensive. All right, let's talk about it. Is the market expensive or cheap? Right now, this is a $50 gold piece. It's a gold eagle. Anyways, it takes about 14 of these. These sell for about $2,000. Now, they say $50, but really $2,000. Okay, so $2,000. It takes about 14 of these to buy one of the Dow. 14 of these to buy one of the Dow. Now, historically, it takes about 6 or 7 of these to buy one of the Dow. But right now, we're at 14. We're actually double normal. Okay. Now, when it's really cheap, like in 1980, took one of these to buy one of the Dow. Now, in 1932, took one of these to buy one of the Dow. That's when it's really, really cheap. But right now, when it takes 14 of these to buy just one share of the Dow's trading about 28,000. These sell for about 2,000. That's expensive. That's really expensive. Now, there's another way to look at the stock market, if it's cheap or expensive. All right. The U.S. stock market right now is about $30 trillion worth of market cap. The gross domestic product in the U.S. is about $20 trillion. So we got $30 trillion in stock market value in the U.S. We have $20 trillion, these are approximate numbers, of the GDP, the gross domestic product. Now that's 150% Dow to GDP ratio. Now that's expensive. Normal is about 1 to 1. 100%. All right, so if the GDP is at 20 trillion, a normal price would be the market cap of all U.S. stocks combined would be about 20 trillion. But before the virus even hit, we were at 150%. GDP 20 trillion. Total market value of all stocks, 30 trillion. All right, now what happened with this pandemic? With the pandemic, did the GDP go up? Actually, no. It's contracted. It's contracted about 30%. 31.4% is what the last report showed. All right, so if we got the GDP down here at maybe only 15 trillion, right? And we got stocks up here at 30 trillion. This is 200% stock market value to the GDP. Now, Warren Buffett will tell you this is ludicrous. This cannot continue. You're either going to have the GDP double, and we're going to have to start producing a lot more stuff. I don't see that happening. Or the market is actually 100% too high. So we're going to go from market, in my opinion, is going to come down. It's going to come down from 28,000 down to 14,000. 15,000, okay, that's fine. But that would put the market back to a more normal valuation. Right now, the market is incredibly overvalued. Now, we're going to get a collapse at some point. This cannot continue. It just cannot. It's impossible. It will collapse at some point. We all know that. Now, of course, the million-dollar question is, when will this happen? When is the collapse coming? Is it coming tomorrow? Could. Is it coming 10 years from now? It could, but it's going to play out somewhere in between there. I'm pretty certain it's going to play out between tomorrow and the next 10 years. Probably play out between tomorrow and the next 3 or 4 years. But anyways, so we got an incredibly overinflated stock market compared to the gross domestic product. We have an expensive stock market compared to gold, which I call real money. So anyways, what do you do? What do you do? How do you protect yourself? Well, let's take a look at another ratio. Okay, so this is gold. This is a eagle, right? It's a gold eagle. It's $50. This is a silver eagle. Okay, gold eagle, silver eagle. Silver eagle, $1, $50 value on these. These sell for about, right now, silver's at about $23. All right, gold's around $2,000. So let's use rough numbers. I mean, okay, well, a normal ratio between gold and silver is about 30 to 1, okay? Right now, we're sitting about 80 to 1. 80 to 1. So we know gold is cheap compared to the Dow, okay? So at some point, gold is going to go 1-to-1 ratio with the Dow. So this is either going to go up to 28,000 or the Dow's going to come down to 2,000. Now, I think it's going to be somewhere in between. I think they're going to meet right around, I don't know, 10 to 15,000 range, somewhere in there. But okay, so this is really cheap right now. Gold is cheap. People think gold is expensive because it's at record high, Mike. It's $2,000. Gold is cheap. Gold is cheap. Stock market's expensive. Gold is cheap. But okay, now if gold is cheap, and this is at an 80 to 1 ratio with gold, when this reverts back to 30 to 1, maybe even 20 to 1, 10 to 1, this is cheap, stock market expensive, this is cheap, this is really, really cheap. Okay, so anyways, what am I recommending? I'm recommending silver. You want to be stacking. Now, I love gold, don't get me wrong. You want to have both, and you want to have physical. All right, where do you get out of these? Where do you sell? You sell when gold is at 1-to-1 with the Dow. You sell off all your gold and you buy stocks. All right? When do you get out of silver? About that same time, or when silver becomes 30 to 1 ratio to gold. It's at 80 to 1 right now. So let it revert back. But silver is the play right here. You want to get some silver eagles, some physical silver eagles. Now, I own call options on the SLV, the GLD. I own call options, but you want some physical. I trade the calls. I trade those are trading vehicles. But physical gold and silver, physical is what I stack. And I don't sell that. I don't trade around that position. Now, you always want to have some dry powder. Now, the dry powder is called cash. So anyways, I'm recommending silver, gold, and cash right now. The Dow, yeah, the Fed's probably going to push it higher. They're probably going to push it a lot higher. But at some point, people are going to wake up, emperor's not wearing any clothes, and the market's going to have this crash. Okay, so anyways, I'm Tall Mike. I hope you liked this information. If you did, hit the subscribe button. Hey, maybe even hit the like button. Give me a like. Hit that like button. Go ahead and punch it. Anyways, the weekend's ahead. Get out there. Have a great weekend. Enjoy yourself. Have a good time. and we'll talk again on Monday. I'm Tall Mike, stock market gambler. Talk to you Monday. Bye.